Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PETROCHINA interim report. PetroChina Company Limited offers a diverse range of businesses and services across various segments. These include exploration, development, transportation, production, and marketing of crude oil and natural gas, refining crude oil and petroleum products, producing and marketing primary petrochemical products, derivative chemical products, and other chemical products, trading of crude oil and petrochemical products, investment in refining storage, chemical engineering, storage facilities, service station, and transportation facilities, provision of technology transfer and technical services, exploration, development, and production of oil sands and coalbed methane transmission, and sale of natural gas. PetroChina's stock price surge. A year of record-breaking performance over the past year, PetroChina's stock price has seen a significant increase of 27.68%, driven by the company's strong financial performance and operational achievements. Key factors contributing to this surge include sustained growth in 2024, with record-breaking net profit attributable to equity holders reaching RMB 164.68 billion. The positive momentum continued into 2025, with PetroChina recording a 2.3% increase in net profit in the first quarter, supported by increased oil and gas production and accelerated development in renewable energies. The company also beat revenue forecasts in the first half of 2025, with reported revenues arriving 6.8% ahead of expectations. PetroChina's operational achievements have been a major driver of its success, including significant progress in boosting oil and gas reserves and production, as well as accelerating the transformation and upgrading of its refining and chemical operations. The company has also demonstrated efficient capital utilization, with its return on capital employed (ROCE) climbing by 153% over the last 5 years. Overall, PetroChina's consistent upward movement in stock price performance, with a 29.23% increase in 2025 and a 31.68% increase in 2024, indicates a strong and stable financial position. The company's ability to deliver record-breaking performance and exceed market expectations has contributed significantly to its stock price surge over the past year. The primary drivers of revenue growth or decline can be identified through an analysis of the provided financial summary. The key points indicate that revenue has decreased across various segments, including oil, gas and new energy, refining, chemicals and new materials, and China's mainland region. However, there are some notable exceptions where revenue has increased, such as in the marketing segment and the sale of materials. Additionally, non-oil sales in gas stations have seen a significant decline. Upon closer examination, it appears that the primary drivers of revenue growth or decline are largely driven by changes in product sales, particularly crude oil, natural gas, refined products, and chemical products. The decrease in revenue for these products has contributed significantly to the overall decline in revenue across various segments. Therefore, the primary drivers of revenue growth or decline can be summarized as follows. Decrease in revenue due to lower sales of crude oil, natural gas, refined products, and chemical products. Increase in revenue from marketing segment and sale of materials. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture for net income and profit margins. On one hand, the company's net income decreased by 5.4% due to various factors such as reduced procurement costs, improved sales profitability, and increased market share. However, in some segments like natural gas sales, net income increased by 1.3% to 7.3%. Additionally, Guangdong Petrochemical Co., Limited saw a significant increase of 984.4%. Profit margins also showed mixed results. The refining business and chemical business experienced narrowing profit margins, leading to a decrease in overall profit margins. However, the natural gas sales segment improved due to increased revenue and operating expenses. Principal operations also saw an increase in profit margins from 59.2% to 62.1%. The reasons for these changes are multifaceted. Decrease in international crude oil prices had a significant impact on net income and profit margins. Improved operating profitability, stable domestic economy, and decreasing international crude oil prices also contributed to the mixed results. Non-recurring profit/loss items had a net negative impact of RMB 123 million. Overall, the company's financial performance is influenced by various factors, resulting in both positive and negative changes in net income and profit margins. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net operating cash flow of 227,063 RMB million, the company is successfully converting profits into liquid assets. This positive trend is consistently reported across multiple pages, providing evidence that the company is managing its finances effectively and generating sufficient cash to support its growth and operations. The company's debt level has undergone significant changes. While non-current liabilities increased by 1.6% from RMB 405,811 million to RMB 412,204 million, net borrowings decreased by RMB 47,358 million. The total debt has also increased by 16.5%, from RMB 192,104 million to RMB 224,124 million. However, the debt-to-EBITDA ratio improved from 1.2 in 2024 to 1.04 in 2025. Interest expenses have decreased significantly, with a reduction of RMB 191 million from RMB 1,421 million in 2024 to RMB 1,230 million in 2025. Additionally, interest paid decreased from $9,854 million to $7,383 million. Overall, the company's debt level and interest expenses have shown mixed trends, but with a notable decrease in interest expenses. The company's financial performance varied across different segments and regions. The oil, gas, and new energy segment, as well as the refining, chemicals, and new materials segment, performed well. Internationally, the company saw an improvement in operating cash flow compared to the previous year. On the other hand, the marketing segment showed a modest increase in sales volume, but low capital expenditure. The China segment experienced a decline in operating cash flow, while the natural gas sales segment's performance was not specified. Management is optimistic about the company's outlook, citing optimization of business strategies with a focus on new energy production and carbon capture technologies. However, they acknowledge increased competition in an opening market and potential revenue reductions due to climate change regulations. The company will continue existing transactions with CNPC/jointly held entities while investing strategically, but notes that related laws and regulations may have an unfavorable impact. The company has a history of paying dividends to its owners. In fact, it has been explicitly stated that dividends have been paid, page 131. Furthermore, the financial records show that significant amounts were paid out as dividends in 2025, totaling RMB 40,455 million, page 166. Additionally, interim dividends were declared at a rate of RMB 0.22 per share, page 6. Concerns about inventory buildup are evident in the financial summary. The data reveals a significant increase in inventory levels by 7.5% over the past year, indicating that the company may be holding onto excess stock. This is further supported by a decrease in write-downs of inventories, suggesting that the company is not writing off as much unsold merchandise as before. The trend is consistent across multiple pages, with finished goods and work-in-progress inventory levels decreasing from June 30, 2024 to June 30, 2025. However, the overall increase in inventory levels raises concerns about potential supply chain disruptions or inefficiencies in the company's operations. That concludes the financial summary for PETROCHINA. Feel free to comment below, and I will be happy to answer them when possible.